Let's take it across to Safir Anand, investor strategist, and try and analyze the market mood right now. Safir, a historic day, morning. Firstly, good to have you back on the channel. Trump and Kim Jong-un finally meeting, talking positive. Do you think this is a big market moving event, or is this just more about headlines?
Good morning. I think it's quite a positive event because it at least puts some geopolitical factors to rest.
Yeah.
To that extent, contributes more to sentiments rather than valuations.
It does. But what is it that you've made of the mid-cap fall that one has seen? I mean, almost 10% in the month gone by for the small caps, 7 to 8 odd percent for the mid-cap, Safir. Do you think the worst is behind us, or would you say that more is in store for us in the latter part of the year? Because just about every analyst that we've been speaking to, an investor and strategist on the street, they say that it's time now to stick it to large caps because mid caps are still sitting at expensive valuations. There's still a whole lot of correction which is in store.
So if you see the large cap basket, I think predominantly the gains in large caps have been driven more by financials. And if you are invested in financials, which could be either banks or NBFCs, I would personally continue to invest in those because there's a clear migration that is happening in favor of the private sector banks with the kind of numbers the PSU banks are reporting. And the NBFC situation is picking up particularly now, or has a good pickup factor because also the monsoon seemed to be on track. But if you're looking at companies, and the consumption side has always been doing well, and that side of the large caps is fine. But I think the mid cap side has got two unique models or two unique situations. There are certain mid caps that have issues of governance right now, where auditors are resigning and there are issues coming up in their numbers, etc. And then there's this pocket that is getting impacted by just a sentiment factor because they all fall like a pack of cards. So you have to pick your mid caps right now. I was traveling the last month extensively to US. I find US is extremely bullish on India. US technology companies, US giants are talking about India like never before. I mean, India is quite in the limelight. And to assume that everything is bad right now, I don't think is the correct thought process.
No, so how do you see, the fall in the mid caps and small caps turning out to be an opportunity for investors? At what point, we just had S. Narain from ICICI Pru say, look, there's still a lot of pain in the system. These falls don't reverse overnight. We've just seen 6 months of the reversal. So, maybe a prudent strategy is to do an SIP for mid caps and small caps. But what is your own sense on how one can go about bargain hunting in this market?
So, like I said, I would look at companies on what sectors they are in and what the opportunities are. I mean, just to give you an example, if the rainfall factor seems to be on track, and with a lot of the issues regarding GST settling in with the organized sector, there would be certain themes in mid caps where opportunities have arisen just because they have got knocked off between 10 to 15%. At the same time, there would be certain mid caps that have, or small caps that have not reported very good numbers. It's difficult to take an assessment on the results right now because some of these results are the result of inventory. I mean, there are inventory shakeups in certain companies, and it's not very clear whether it's been the impact of a GST or there has actually been a slowdown because of some reason. There's also a marginal impact in terms of oil. When I say marginal, it means because oil itself has started, correcting now from the levels that it had reached. So you will have to take a bigger macro call, and there are certain pockets of mid caps that, according to me, were battered far more than what they deserve to be. So while I was not shopping for stocks in the last several days, I think about 10 days back, I did tweet about the fact that, or maybe 7 days back, that it's a good time to go shopping for mid caps and small caps now.
Where is Safir Anand hunting then?
I have a net buyer.
You have been. And what are the pockets of interest? Is it more of the same, the spaces that you've always liked, or are there newer spaces and avenues that you're looking at, given how sharp the fall has been in select segments?
Actually, just adding to Aisha's question, I mean, when we look at some of your top bets, I see a clear tilt towards mid-cap IT.
Yes, so the last time when we spoke, the three sectors that I had identified were tires, were mid-cap IT, and consumption. I do not think that barring one particular idea there, which actually had moved up almost about 9 times and is corrected now some 20% from that top. The consumption story has remained intact. The mid-cap IT story has actually gotten better, particularly where there is involvement of cloud and specialized retail and solutions relating to NBFCs and finance and things of that sort. And the tire sector, actually, I don't think there has been any change in the price of either the two large tire companies that we spoke about. Actually, three of them. So there's nothing really of value that has emerged there from the last time that we spoke. The story is robust in mid-cap IT, but there are other pockets of stocks where the interest now has become more focused. One clear sector that I see can do well is the home improvement sector, which could be dissected into, for rural India, it could be roofing companies, because when monsoon is good and people move from kacha houses to pakka houses and they go in for repairs and things of that sort, and these are not factors that are so centric around just paint. Those kind of sectors do look well for rural India, and for urban India, it's just general home improvement, the specialized retail around home improvement, and also specialty chemicals. I think a lot of specialty chemical companies have got knocked off in the last few days. Some of them are companies that have grown consistently for 5 years running. They have their ups and downs with crude oil, but the general opportunity before some of them, because of specialized nature of their businesses, is quite unique.
Where within large caps, though, Safir, do you find comfort? Because one has seen that IT's turned out to be a great trade. Select FMCG names, and I would extend the basket larger to saying that it's the consumption theme which seems to be working really well, and just about anything and everything under that umbrella has been holding out well. While we're cribbing about the fact that broader markets are seeing that kind of sharp downturn, some of these stocks are still sitting at their peak valuations. Do you sense that even in the next few months to come, this is the trend that you will see, where IT and consumption are going to be the two dominant winning themes in the market?
Well, there are more stable stories in IT and consumption and in private banks, and therefore, if you want to be a very stable investor, there's no reason why you should be out of these sectors. At the same time, some investors, I mean, the greatest money is not made in necessarily pursuing the obvious, and sometimes you have to take a bet, based upon certain considerations that you may believe in, and sometimes the market may be a disbeliever just by a concept of a herd thought process. I think some of the mid cap, the reaction to mid cap is not warranted the way in general. I mean, you can't just paint a sector and say that everything in mid cap is looking expensive, and it wasn't expensive just a few months back. It's not necessarily become as gloomy, and therefore, from a large cap perspective, I would recommend you to be invested in the three predominant sectors, which is private banks, consumption, and IT. But surprisingly, pharma has also outperformed the market. Many people may not believe this, but when your portfolios are down, say 10 to 20% in the fall that the market has seen, and you actually have an upsurge of maybe between 2 to 3 to 10% in pharma, you've actually bought security in a way. And since the global flow of money to a fund manager is also guided by his ability to outperform the market, you're actually outperforming the markets even in those sectors.
Yeah, I was just going to come to that, Safir. Pharmaceuticals, and given the kind of positive news flow off late as well that we've seen, what with the conditional approvals coming in for Sun Pharma's Halol, Oro's Hyderabad unit as well. Is selective the approach, though, when it comes to pharmaceuticals? And what are the names that you're bullish on right now when it comes to the pharma pack?
So there's not a change per se in the rationale for investing in the sector. It's been a wealth creator for all its while. There have been issues with the pharma companies in respect of cleanup activity. But in common sense terms, if you have a house and you clean it up, you actually like the house more. You don't start disliking the house because you brought in a sanity check there in terms of the cleanliness factor. And I think the market reaction to a large number of pharmaceutical companies is, I think, overstated. There are very interesting companies there that are in niche areas. There are companies there that have a huge amount of product pipelines and APIs and drug. Some of them have pricing issues right now with US, but many of those issues are likely to be sorted with time. And if your horizon towards those companies is in consonance with your portfolio composition of sort of balancing the aggression with defense, then there is no reason why you should not be in those companies.
Right. Okay. Financial, Safir, what's your approach towards financials in this sort of a market environment? Are you being contrarian there or going with the safer bets in NBFCs?
No, so if you own the three large banks in India on the private sector, which is Kotak Bank and IndusInd Bank and HDFC Bank, I don't think you really need to look at your portfolio on a daily basis. They're taking care of you. They're like your caretakers. And every quarter, the managements of these companies come and say that we are deploying technology in a better way than we were doing previously, and therefore they're bringing in efficiencies and penetrating markets, and they've gone far beyond tier two now. And new products and services don't have to be innovated when the market is willing to absorb. Liquidity right now is tight, and therefore there is always going to be a demand for money. And that demand is shifting away, like I said, from state banks into the private sector for multiple reasons. And then there are issues with NBFCs, because if the rain is good, then the consumption takeoff for funding, for whether it's trucks or whether it is in renovation or it is just for business need, etc., will always go up, and therefore those NBFCs will continue to do well. But there's not been a significant correction there anyway. So if you're talking in terms of an opportunity cost, the story hasn't changed. You could have been invested in them a few months back, and you continue to be invested in them even now.
Fair point. Safir, always good to catch you on the show. Thanks so much for taking out the time.
Thank you, and thank you for having me.
Thanks.